Good morning, ladies and gentlemen, and welcome to the RBG Holdings full year 2021 results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, as usual, we'd like to submit the following poll, and I'm sure that Nicola and Robert will be most grateful for your participation. And I'd now like to hand over to Robert Parker, CFO, and Nicola Forstone, CEO. Good morning.
Thanks, Mark. Good morning. Apologies, everyone, for the slight delay to our presentation this morning caused by tech problems in chair, namely mine, as always. And also an apology for the delay to our results. I think, like many professional services businesses, BDO has been suffering from, COVID, impacts of COVID. And luckily our delay was not as some other companies are. So introducing ourselves, most of you, I hope, on today's call will be familiar with myself as Group CEO, and I'm joined today by Robert, my Group CFO. And our experience is commercial and non-professional services, which we've obviously touched on before, and which I think is quite well known. Just a reminder on how the group looks today. Again, this well-worn chart, hope to be adding a few more blobs one day. But we've got the RBG Legal Services banner that we've created to house our legal service brands in Memory Crystal and Rosenblatt, but RBG Legal Services is the entity that's licensed by the SRA and operates as the law firm in effect. And 90% Lionfish, 100% Convex, and still the small investment in Adnitor, the IT consultancy business. As I always do, just stating where our strategy was, and I want to just touch on this slide, which may not be appreciated by some of our investors, that it was always our intention to build a professional services group of businesses that are like-minded, high margin, quality, good at what they do. But they are separate businesses, and therefore RBG Legal Services has its own management team, Convex has its own management team, Lionfish has its own management team. To that end, we don't integrate the businesses so that I am managing everything. And that means that we're very efficient, but it also means that we've got motivated, quality people running those businesses on a day-to-day basis. And we won't have the kind of front-end integration that means that there's not enough focus on the day-to-day lower ground operations of those businesses. So we wanted to use our commercial management to do selective M&A and to build and diversify the business, and we wanted to use our expertise to move into litigation finance. So how are we tracking against that strategy? So today we've grown the legal services business from 20 million revenue to 33 million revenue. It's 70% of the group's revenue in 2021. On a full year integration of Memory Crystal, I would expect that to be 80% of the group's activities. So as you can see, the team has grown cost effectively, I like to think, and we're developing a brand equity in terms of investing in our legal services brands at the front end of the business. And we think we've improved our offer in terms of having a strong non-contentious side to the business to join what was already a strong contentious side to the business in adding Memory Crystal, a very well-known corporate transactional mid-market London-based law firm. In terms of our strategy in litigation finance, again, a reminder that we started in box A at the left, having our own litigation investments into our own matters and our own clients under RBGLS, or what was Rosenblatt. And then we moved into, we've invested 7.6 million into our own cases on our own balance sheet, acquiring some as part of the Memory Crystal transaction. So we now have 13 live matters. And then we launched Lionfish in May 2020, and we now have 11 investment assets with a committed capital investment of 10.5 million, of which only 3.7 million was drawn at the end of the year. Just a reminder for those of you that may either not remember or not have joined us before, Lionfish charges on its total deployment. So if a case settles halfway through the budget, they will pay us back based on as if they had drawn down the full commitment. So our pricing is on the 10.5 million. In February, we announced a new off-balance sheet finance investment arrangement with a large alternative investment firm, giving us an additional access to 20 million of finance, which I'll talk a bit more about later. Sorry, I'm recovering from COVID and sinusitis, so I hope my voice is going to hold out for the duration of the presentation. So we began, obviously, in terms of our M&A strategy. We started with Convex, or originally we started with Rosenblatt, was our initial actually acquisition at the time of the IPO. Then we added Convex, Lionfish, and then obviously Memory Crystal, and creating a legal services division. We are very keen on engaging in considered M&A, so we will not just bolt on and continue to add revenue for the sake of it. It has to have a reason for being acquired that's more than just growth. So in Memory Crystal's case, I think we've talked about this before, and I'll do in a lot more detail on their slide. It was about income diversification and adding services that we were not already strong in. So any M&A activity will be about adding services that we don't currently offer, but that we think have a fit with the business that we are. So they won't just be added for added sake. Just a slide that I don't normally get to do financials, so I was very pleased to grab this one and show you these graphs. We got some criticism last year, and I hope you'll like the improved format of these slides and of Robert's presentation, showing you graphically our progress. The only thing that's disappointing about these slides is our share price growth doesn't track the same trajectory, and that's obviously something that we are trying to solve. So considerable revenue growth there, and the Ebitda and profit before tax tracking along with it. So I think that's a quite impressive looking slides. And therefore, on that note, I'm going to hand over to Robert to take you through the financial presentation.
Morning, everyone. And as Nikki, oops.
I did it, sorry.
As Nikki highlighted, we've changed the presentation in response to some of the polite criticism we had last year about it being too detailed and not focused enough. So we've tried to pretty it up a little bit. So let's take you through it. So I think this just reaffirms the statement we made in January about being on market expectations, but this gives you a bit more flavour. So our group revenues are up 86% to 47.2 million. The important part within that is, yes, we've bolted on the acquisition of Memory Crystal, and that is performing very strongly. But our organic revenues in the professional services are up 20%, and our litigation gains again are up 84% on the sales and the realization of that. Driving through, and you'll notice with these rows that the revenue is driven through to the bottom line as well. Our Ebitda, our adjusted Ebitda, is 13.8 million, up 90% on where we were last year. And the percentage is the same as we had last year. So we're maintaining that Ebitda percentage despite the movement in the group. Our adjusted profit is up. We're generating positive cash flows. We've paid a 5p dividend, and our net debt has moved from net cash to net debt. And I'll explain that in a little bit more detail later as we go through the cash flow movement. Some other key financial metrics that we always look at and we try to bring out year on year. Our revenue per fee earner has come off from 2020. If you remember, 2020, we were probably a 70% dispute resolution business. Part of the reason for the acquisition with Memory Crystal is that we had a balance within the services and the divisions that we deliver into. Our dispute resolution now is probably around 35% of the overall business. And what you'll see is that a natural reduction in the revenue per fee earner. But what I will say is that at 347,000, we're still in the top 20 of all UK law firms on our revenue per fee earner. So still delivering significant results. I mentioned our Ebitda before the adjustment of 28%, 27%. Last year, if you move the right back of the deferred income, we were delivering a similar sort of Ebitda margin as a percentage of revenue. We obsess a little bit about lockup, if you've listened to us before. So our lockup is 109 days. It's drifted a little bit up from where we were last year. A lot of that is potentially the mix of the business, but we've still got a strong focus on it. So our debt days are 59, our WIP days are 50, and all those disciplines we're trying to map across the whole business. And I would say, compared to the industry average, I think the industry average is something like 150 days. So we believe we're a commercial team. We believe we drive at cash, and some of these metrics validate the process that we're going through. This year we've gone through another audit. We have had a change of audit partner, and with that we had a review on our accounting for our litigation sales in Lionfish, and as part of that, our auditors have come with a different perspective on some of the sales that we made in 2020. We sell two types of product in Lionfish. We call the naked deal, which is effectively there's nothing around it, and then in an insured deal, the insured deal has got an insurance wrapper where it will pay back the core investment that's been invested, or the seed investment. On review of this, our auditors believe that it didn't qualify as a sale or a disapplication from IFRS 9. So there's been an adjustment in 2020. We no longer sell this product, and we won't moving forward. So this is a one-off adjustment in it. So effectively, they're saying it's not a sale. So there's an impact on our P&L in 2020 of 300k in comparison to the 6 million that we delivered. But the significant part is that the balance sheet is being reflected as we've written back the sale. So you see an increase in the litigation asset in the asset, and also on trade payables as well. So that was reflected in our numbers. And as I say, that hopefully this will settle down now. But IFRS 9 is quite a difficult accounting standard, and it's fair to say that we're trying to fit within the standard, and it doesn't perfectly sit with us really. Just want to do a little bit more detail on the income statement, and Nikki mentioned that look, the legal services is the largest part of our business. It's 33 million of the 47 that we delivered, so it's 70% of the total revenue. But always to keep in mind that it's 50% of our Ebitda that we drive. Both Convex and Lionfish are significant contributors to the Ebitda as part of that diversification strategy that Nikki talks about, where we've tried to manage our risk across a number of parts of the business and a number of the fee owners. I want to pick out some key other areas. As I mentioned, that we account for our litigation sales under IFRS 9. We try to track cash as best we can, and we've always prudently, and you're not allowed to say prudently anymore in accounting, but objectively, our litigation sales and our litigation carrying on the balance sheet are as close to cash as we can make them within the fair value treatment that we look at. So our litigation realized fair value gains was 5.2 million, and that equates to, we had 4.9 million of cash sales in 2021. I want to pull out that the business has doubled, so you'll see a doubling in certain costs. Our Ebitda margins, if you remove from last year the one-off write back from the deferred consideration, are on par year on year. So we're maintaining that profitability as we're growing the business. Our personnel costs are now 27 million, but as you see, at the end of last year, we had 92 staff. At the end of this year, 2021, we had 223 staff. So you'll see a natural increase in costs as our employment base has grown. So we've increased by 131 staff. Part of the acquisition, the acquisition with Memory Crystal delivered 128 of that incremental staff. Within the personal costs as well, we have a one-off year in Convex. In our attempt to create an incentive that, as the guys missed their deferred earnout last year in Convex, we delivered a commission scheme, a 20% commission scheme on completed deals. This was in addition, the guys added back, Mike, the MD of Convex, basically took no salary last year, and his two other main directors took 50% salary in exchange for a 20% commission on the signed deals. So that will be sitting in our personnel costs and will flow through this year and won't be there. It was a one-off thing. The other thing I want to pull out is our other expenses. So it looks like we've had a massive increase in our overheads, and last year we only had £600,000 worth of overheads. I wish it was only 600,000, but the reality is that's been affected by the 2.6 million write back. But our overhead costs have increased. It's doubled as the business has doubled. We've got to focus on our overhead costs. The one thing I say within those overhead costs, the growth in insurance cost within this business has been exceptional over the last 2 years. Our PI insurance costs, I would say, has gone up 150% over the last 2 years. It's been phenomenal. So within that overhead, other expenses, 800,000-900,000 of that will be our insurance costs within the business. Just quickly want to break down or break out the depreciation. So we're in the depreciation because of IFRS 16. We take the rental cost below the line, which everyone is doing now under IFRS. So within the depreciation of 2.9, 1.8 million of that is the rights of use. It effectively is our rental costs, but that has been taken down below the line. We've got some one-off costs of acquiring the business, DD and legal costs for the acquisition of Memory Crystal. So that's the adjustment that takes us to an adjusted Ebitda of 13.8 million. So try not to keep you dragged down. So we move on to the balance sheet. So you can see from our balance sheet that the largest part of our balance sheet is the intangible assets, 55.8 million. That's made up of our 3 acquisitions. As you show you on the slides, I've broken it down between Rosenblatt, Convex, and Memory Crystal. And as part of every audit, we do an impairment review, and all of the businesses that we've acquired have delivered significantly, that we have significant headroom on the impairment review and our carrying value of those assets. The other thing I quickly want to pull out is our litigation investments. Again, these are accounted for under IFRS 9, so we fair value them. So we're carrying 11.5 million in our balance sheet as a fair value of those litigation assets. I just wanted to highlight that to date we've invested 11.4 million. So they are as close to cash as we can get them under the accounting standards that are there. Just walking down quickly to trade and other receivables. Now, our business is doubled in size, so effectively our trade and other receivables have moved in that direction as well. Our WIP is now 6 million as part of that 18.5. Our debtors are 9.6 as part of that 18.5. But as you can see, as I mentioned earlier, our lockup is 109 days. So we have a significant focus on both our WIP and our debtors, and we're mildly obsessive about it. Within there as well, we've got some prepayments of the insurance thing is a great market to be in. You have to pay everything up front, and they can raise the cost whenever they want. So within our trade and other payables, we've got circa 2 million of prepayments. The trade and other payables, I'll just pull out a few things in there. So 1.9 million of that is our trade creditors. That's only 700k up from last year. Got to focus on our trade payables. So that's very well managed within our business. Within the 11.5, what we do have as well, and what we have to account for, is that we have put and call options on the remainder of Lionfish and the percentage of the business in Adnator that fixes a fee that if we potentially wanted to buy it out, that fixes the cost. There's 1.5 million in that trade and other payables that relates to the put and call option around those 2 businesses, which we have to account for. Just quickly on the net debt. So our net debt is 14.2 million. We have cash of 4.8 million. We had an acquisition loan in order to acquire Memory Crystal, of which we paid down 1 million already. So it's at 9 million. And before, when the pandemic hit 2 years ago now, we drew down 10 million of the 50 million RCF. So that sits within our business. We were just keen to have the money in our account at the time, because we were worried that the banks would go back and behave as they normally did in the crisis of 2008. So we've done a cash flow bridge as well to show you what money we're generating and the movement within that. So I'll pick out some key points in that. So effectively, we generated 12.6 million of Ebitda cash, and that was invested across the business. We've got some advanced tax payments. It's £1 million. The acquisition is 16.5 million. And what you see is made up of 3 parts. So there was the initial 12 million payment for Memory Crystal. There was a payment of the 3.4 million of the deferred payment, and also the 1.1 million of the deferred earnout for Convex as they delivered the business. Part of the original deal was that they had a cash earnout proportion to that. As I said, we've taken out the term loan of 10 million. We've paid 1 million back. We've made 4.7 million of litigation investments. You see the lease payments there, which we highlighted before, to drive us to a closing cash position of 4.7 million. So effectively, we're still comfortable within our RCF, and that's about it. I'll hand it back to you, Nikki.
Thank you very much, Robert. So again, I'm just going to take you through a little bit more detail about the businesses. So just to remind everybody why we wanted to buy Memory Crystal, we already had a very strong contentious department and a brand in contentious law, and Memory Crystal was for us a perfect acquisition in terms of having a very strong brand in transaction and advice and corporate transactions. It came as quite a nice surprise to find they also had a very nice litigation department, and therefore what we have sought to do as part of the integration is to actually move those people into the contentious business of Rosenblatt and to move Rosenblatt's non-contentious corporate transactional teams under the Memory Crystal brand. This is the first time and will be the only time that we will do what we call a front-end integration, which is where we actually move people and change them under the different brands. We strategically targeted Memory Crystal because in terms of the marketplace, they were our competitor in the mid-sector, having a strong brand against us, and indeed we had lost staff to them. So, and I'll come on to, when we look at the business in a bit more detail, how the integration has gone. But just again, grabbing a financial slide to myself for a change. I've got the revenue per fee earner here. I just wanted to draw everyone's attention to the fact that even though we've got some dilution in our revenue per fee earner, it is still tracking ahead of the top 100, and we would expect it to do so. Obviously, I'm very keen to continue to push it back to the levels we've seen before, but the dilution is deliberate. It is important to hedge the business and to be able to hedge the what is crisis work that we get in contentious law with the regular corporate transactional work that we see through Memory Crystal. I'm not going to talk about utilization and lockup days, as I know Robert focuses on that a lot, but I do want to just remind everybody that we had expected to have quite a lot of margin erosion in RBGLS within the legal services division as a result of having a lower margin business come in. And during the integration, we were targeting sort of 25%. So I'm pleased with what we've achieved by the end of last year. There's no question that that will be improved as we see the full year effect of the integration savings in 2022. So what the legal services division looks like today is about 35% of it is corporate transactional, about 30%, 28.9% is real estate and real estate litigation, and 35% is dispute resolution. I would just remind everyone that we do an awful lot of litigation investments, on which annually we do about £2 million worth of work that we can't recognise and is written down to zero. As a result, that 35% of dispute resolution is actually a little bit higher in terms of actual worked time and worked hours. So in terms of, and I know that we already are, I can see from the questions, there are already questions around the recent statement that Knights has made. And I wanted to use the opportunity on this slide of reminding everybody about how our business strategy is and what we're trying to achieve. I always believed in having a professional services businesses that was made up of different businesses which had their own commercial management teams. In the legal services division, that's no different, and RBGLS has its own dedicated COO who joined me in February, and I have stepped back to concentrate on being the strategic group CEO. That business is therefore run independently on a day-to-day basis of the group, and it's very much our intention in the future to add other branded legal services businesses under the umbrella of RBG Legal Services, offering legal product that we don't already offer, and therefore as a result there will be no need for a front-end integration. So this was a very unique acquisition for us and a very unique transaction. Again, I've got a financial slide which I'm not going to spend too much time on. Performance indicators here are just again the revenue per fee earner is in the blocks of blue of where we've been since 2018. and showing how our debtor days and lockup is tracking against that. And obviously strong cash conversion, as you can see on the right-hand side. Robert, much as I love listening to your cold, do you mind going on mute?
Oh, sorry. It's a proper man flu. It's not
Proper
cold.
man flu, yeah. I can testify to that, everybody. I've been on the receiving end of his good humour. So to summarise the legal services division here, we have obviously, now that we've completed the integration at the end of last year, we're now focusing on bedding down the individual teams. There's no question that in terms of the way the business is operated, there was some cultural differentiation between the two businesses. Rosenblatt was very much a meritocracy. The culture of the business under Ian Rosenblatt and latterly myself was not dissimilar, whereas Memory Crystal is in true terms a democracy. And in business, I don't always believe in true democracies. And I know I'm joined today by my senior partner, Nick Davis, who's listening and always listening to all my presentations. But I think in business, sometimes there needs to be commercial leadership. So there have been cultural changes that are going on. I'd like to think those are bedding down now. But we're very focused on those, and they remain the focus of my management team at RBGLS for the remainder of this year, so that we can extrapolate real value from that business, but also ensure that in what is a hot labour market, we're able to retain, motivate and incentivise our people to be part of the group. Talking about Convex now, obviously everybody I think on the call will know that Convex is a specialist sell-side only M&A practice. Convex is quite unique in that respect, and therefore I do consider that it's quite inured and quite protected from some of the broader M&A trends that you see written about in the papers, and that no doubt some of you will ask me questions about. And so therefore, because they make their own market, they go after their clients, they find their buyers, they're a very proactive business, and we're not seeing currently any impact on the M&A activity. We have a solid pipeline. It's signed through to the first quarter of 2023, and they are in various stages of transactional development. I feel therefore comfortable with Convex today and comfortable with the market forecast that we have in place. I do always just give you a flavour of those deals that we're seeing on the pipeline. As you can see, he's continued to rebuild that business away from the pipeline that he had pre-pandemic. So it's now is dominated by online, and there's technology and business services and healthcare and other bits in there as well, as you can see. We've moved away from showing the stages of completion of various deals because there was too much prediction in the market by our retail shareholders as to when these deals would land, which I didn't think was very helpful. I also want to touch at this point, and you may have seen it, that we issued a separate RNS this morning announcing that we will be issuing various incentive share plans over the coming months. And those in terms are driven largely by Convex and RBGLS. So in Convex, we had replaced the earnout with an option, commission scheme that enabled them to earn commission out of deals that they delivered and also buy into the equity. This wasn't a hugely efficient way of getting equity in a tax-efficient manner to the management team. And we felt that it wasn't fit to continue and roll out beyond 1 year. So we are replacing it with a form of growth share. What that growth share will do in both Convex and in RBGLS is we set the value for the subsidiary at the beginning of this year, and then we share a percentage of the future growth with the key income drivers and management team of those businesses. And therefore it's entirely self-funding through the future growth in the valuation of the business itself. And at the end of 3 years, the equity that they've earned will convert within the PLC. I do stress that this equity conversion and all share options will all be within the 10% guidance that we've given around issues of share capital within our overall capital allocation. Moving on to litigation finance. And again, just to remind everybody that RBG Legal Services, through its brand Rosenblatt, invests in own client litigation matters. We acquired about 3 or 4 CFAs from Memory Crystal, and they've been transferred into Rosenblatt. And then we can now, through Lionfish, invest in third-party litigation matters via other solicitors. In terms of RBGLS, because we are increasing our cash pay work, we have been able to increase the amount of contingent work that we take on. And as I do remind you, we don't recognise that. I mentioned already the 2 million in revenue that we annually do that isn't recognised, and now bringing our contingent WIP since IPO to 11.3 million of unrecognised WIP. We have invested 7.6 million in external disbursements, counsel and expert fees on those investments. None of the potential returns from these cases is recognised and is all potentially icing on the cake. It is disappointing that the pandemic hitting when it has delayed the outcomes of some of these investments. RBGLS was carrying, as some of you know, 2 elephantine investments in Shango and Mercury, as we refer to them, and those cases are ongoing. And there's no question that we've probably seen a good 18-month delay in the where we'll end up in the culmination of those cases because of the courts moving to online during 2020 and early 21. But we're now pretty much, and in fact, we've just had a very large case gone for 4 weeks in court in person. So we're very much back to normal in that regard. Turning to Lionfish now, as you can see, we've got 11 current investments. We've got a high attrition rate in terms of the inquiries that come in, and that is entirely normal for a litigation finance business. You would expect to see that there will be a large amount that will be turned away. We have a capital commitment on those 11 cases of 10.5 million, of which we've drawn 3.7. And I reiterate that our pricing is on the 10.5 million, and the average duration of the investment is 2 years. So we are very much, and again, I remind everybody that we've moved away from the de-risking model where we're selling down our investments and to investors. And when I talk you through the new arrangement that we made with our alternative investment provider, we're actually prohibited from selling down investments under a 2 million per investment, unless we actually had an investment that was more than 2 million, and then we can sell down any excess. So that's not going to be our model from now on, and we are working on the basis that we will start to see returns for investments as we've moved through 2 years worth of cycle. Just turning briefly, we did do a separate presentation on this, but for the benefit of those of you that were not present at the specific presentation we did on this arrangement, we have secured 20 million of off-balance sheet finance. That finance is protected by a capital insurance wrapper that enables it to be cheaper finance and is costing us a single-digit percentage return on that 20 million. But I do stress that it is off-balance sheet, and therefore it is not a debt that is ultimately secured by this group, and therefore not part of our leverage. The benefit of this transaction to us, apart from having more funds to deploy and attract more cases, is the fact that we will take 90% of the returns on that 20 million without having been having to deploy any of that 20 million. Our commitment to this is that we must fund 25% of every case. So on 20 million, if that was all deployed, we would be deploying around 6 million. Moving on to the outlook for 2022. There's no question that the group is in, I think, a fairly strong position, and the business is generating good cash profits. What do I think the outlook is for 2022 in terms of our progress? I do not have the same concerns that maybe some of my competitors have expressed in the marketplace about what will happen, and that is because our model is quite different. We're both, most of our businesses rely on a quite strong entrepreneurial client base, owners of businesses, founders of businesses, and that means that the way in which our activity is structured is quite different. And therefore, we are not seeing the downturn in corporate activity that some of our competitors have spoken of. But we would not necessarily expect to, because they have got a broader institutional-based and much higher volume corporate activity model than we have. I want to touch briefly in the outlook on Russian clients, which I know is probably a question I haven't checked, but is inevitably a question that I will get. We need to remember that there are two aspects to this. There are sanctioned Russian entities or people, and there are non-sanctioned Russian entities and people. And I will be so bold as to state, and maybe be unpopular for doing so, that there are an enormous amount of Russian people who condemn what's going on in Ukraine in the same way that all of we do, and many of whom have lived in London and worked in London for many years, in some cases all of their lives. And therefore we do not have a blanket approach of banning Russian clients. We will work with those that are unsanctioned, and we will continue to work with those. But what we are doing is we've added a layer of compliance checks that means they all cross my, and we do look at them on an individual basis to ensure that we can get comfortable with them on many levels. As far as sanctioned work is concerned, again, we need to be very careful to understand that the UK government does license certain sanctioned entities, normally corporates, in order to be able to meet some of their contractual or fiscal or regulatory obligations. And in that respect, we will work with those entities, again, if it meets certain high compliance reviews that we undertake. We mustn't forget that in Rosenblatt, we have a branded product that offers a solution to difficult situations, for difficult and challenging people or entities. We have a white-collar crime practice that works specifically in the area of sanctions, and obviously not just sanctions for Russian entities, sanctions on anything. And therefore, this is an area in which we do make a living, and which we will continue to do so as long as we are comfortable that it is the right thing to do. So in terms of our outlook for 2022 economically, I am viewing the year with, I'm always cautiously optimistic at this time of year, as it's only Q1 and we're going out a month earlier than usual. But I'm comfortable with 2022, and I do think that we will have opportunities for strategic M&A in this market, and there will be many other opportunities thrown out by the inevitable crisis that surrounds the economic conditions that we're seeing in the market today. Many thanks for listening to my presentation, and I'm sure Mark will take the floor for questions.
Most definitely, Nicola. Thank you very much indeed for your presentation, and Robert as well. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of the screen. But as while Nicola and Robert review the questions submitted already, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. COVID and handkerchiefs to the side, we've got plenty of questions to get through. We had a number pre-submitted, and if I may just start with those. The first one, just a general question really, is what is your 3-year ambition for the company?
So I think that what we want to see here is we want to see organic growth in the legal services business, the consolidation, the integration. I want to see some strategic M&A on areas that we haven't yet satisfied. And then I want to see us realise our ambitions of being valued at a level that I believe that we should be valued, which is why we've today announced an executive incentive plan to support that aspiration.
That's great, thank you. How much business do you have with Russian clients? Has the invasion of Ukraine had any indirect impact on Protected 22 performance?
We didn't have that much exposure to Russian clients. We have only stepped away from one client, and if those of you are following the press will see that actually we do have a legal obligation sometimes to act, and judges don't always let people step away from their clients. But we have stepped away from one client, and there are no impact to our numbers.
Thank you. And then the final pre-submitted question before looking at the live questions. Are any of Ian Rosenblatt's shares still charged to his bankers?
We believe so, because there's been no further announcements that we've been asked to make.
Okay, great. Thank you very much indeed. Nicola, you did touch on David's question. I think you related to the Knight's question. I don't think perhaps if there's any other colour. He said strong performance, particularly pleased with the organic growth and widening margins. The release of Knight's was pretty alarming for the market. They stated they had corporate demand was weakening. are you experiencing anything similar? I know you did touch on that, but just in case there was anything else to add.
I think the only area we are seeing a weakening off is obviously the IPO market itself. Primary placings are definitely down, but secondary work remains and our pipeline remains strong. Yeah, we were a little surprised, is all I will say about the night's announcement. That came as a surprise to us too.
Great. Turning to Richard G. Thank you, Richard. The growth has been very impressive, but what growth rates do you forecast going forward? The market clearly doesn't believe the growth will continue based on the share price.
Well, I'm going to throw this one to Robert in a minute, but I have no idea what is going on with our share price this morning. This is now beyond baffling. The only thing that we felt on the analyst call this morning was that maybe some of the news that we're announcing today is priced in. Although again, that still seems quite lame when you look at where we are today. Growth rates themselves are quite difficult to predict, aren't they, Robert?
Yes, and we don't forecast any numbers. So there's a note in the market from our broker. So next year it looks like to be a 20% growth on what we did this year. So that's a forecast put in place by Singers actually, or our advisors.
Thank you. Tim, we've got a couple of questions for Tim, if I may. What is the total level of earnout commissions for Convex and bonuses for RBGH executive directors in the 21 accounts?
Robert?
Yeah, the Convex one, as I mentioned, Convex had a 20% commission, but they also handed back or didn't take their salaries, or Mike didn't take his salary for all his salary, and two of the other directors only took 50%. So I think it's circa around 1.3 million or 1.4 million for Convex if you net both out. And I think the executive bonus in the scheme, as you can see in the numbers, was around 600k.
Thank you. Tim goes on further. Will options be granted under the EIP only converting to ordinary shares after December 26? And what will the minimum share price need to be for the options to convert?
Yes, that is the case. The earliest would be December 2026. The minimum share price I think he has to get to is about £2.
Thank you. And then finally from Tim, with how many of the external largest shareholders were the EIP and growth share schemes discussed, and what were their reactions?
With all of our largest shareholders, basically the largest institutional shareholders, and with Ian Rosenblatt. And actually there was complete support. There wasn't really even any sort of criticisms. We did get some suggestions, and we did use them to improve some of the metrics around how the EIP works. So actually largely very supportive and understanding of the fact that it has been difficult for the senior management team to be paid cash bonuses, because often we make our numbers, and then if we were to be paid a cash bonus, that of course means we miss our numbers. So we have traditionally waived our bonuses. In fact, 2021 is the very first year that Robert and I will have been paid a bonus.
Thank you. And Tim, I hope that addresses your three questions. If I may turn to David, who asks, with the rising costs you are subject to, are your targets for margin growth to 35%, I believe, still realistic?
I think so. I'm going to throw this to Robert, of course, as well. But the reason I feel so is that although we're seeing rising costs in certain areas, insurance, some staffing, rising costs, we're also, remember, all of the time, we're improving our efficiency around WIP management, pricing, and how we scope and target our work, particularly on the memory crystal side of the division, which hasn't been subject to this level of scrutiny before. Robert, would you add anything?
Yeah, I think the target's been there and we've achieved it previously. I think the thing to highlight is that we do high value work, so there's always a market for that. So the more and more high value work, it will drive into that. If you look at the margins in Lionfish, look at the margins in Convex as well. These are all high margin businesses, as is RBGLS as well.
Thank you very much. Just extension, I guess, a thing we've already spoken about from Michael T, who wishes you all the best in recovering from COVID, but goes on to ask, please can you explain the rationale behind the part of the EIP which is entirely non-performance related, giving Robert Parker 1 million shares at nil cost?
Of course. So Robert joined us just after the IPO as an interim originally CFO. And you'll have noticed that he has not been awarded any share options throughout the 3 years that he has served. The reason behind this was, although that we had discussed and agreed with him that he would receive share options, the accounting treatment for share options is a write-off to the P&L. And during the early years, we did not have sufficient bandwidth within the business to take this additional cost. And therefore, effectively, Robert took his options on trust that they would eventually be granted, because obviously you can't exercise them unless they've been granted and notified to the market previously. And effectively, had we issued options 3 years ago, the performance condition would have been to be retained in service for 3 years. And in effect, in issuing these options now, after 3 years service, we have a further 2-year vesting period as a condition. So in effect, it's a commitment for 5 years to support me in the growth and expansion and development of business, which I think you can see he does very well. And I think it's been said, in fact, on this very platform, your feedback, which I read all of avidly, you're very kind in saying that we are a management team that very clearly have a good fit, and there's a good dynamic, and I think we're a very strong team. And this is in recognition of the work that Robert has done as a non-equity holder over the last 3 years.
Thanks, Nicola. And Richard, who asked a very similar question, I hope that addresses that for you as well. Turning to John, who asks, in what areas of law do you anticipate expanding RBG legal services into?
I think that what we're interested in, there are still high margin areas of law that we don't cover. And obviously I can't give specifics, examples really, because the market is quite small. And we do on this presentation have many staff and members of the legal profession who would understand and recognise possibly the companies that I'm talking about. So I won't be able to talk about specifics, but there are areas of law that we don't do. But what I will say is that as a result of that, that means that we would want to take those businesses to retain their brand and to retain their front end and their fee earners and their partners to drive those businesses. And we would effectively bring the benefits of the back end support structure and also our commercial sort of corporate governance oversight. But they would tend to be high margin and have something about them that we like and we don't currently offer.
Thank you. David B asks, around the courts and around the COVID variant, are you still experiencing disruption, or are things getting back to a more normal working pattern?
It's getting back to a more normal working pattern, and there are certainly things, a lot more is happening in London than was happening. Unfortunately, that meant that when the variant Omicron, which is obviously mild, went round, everyone's getting it. So unfortunately, that is having an impact. We're quite lucky; it hasn't hit us as much as other businesses, and we, so far anyway, fingers crossed, we haven't had as much impact on productivity. I would say that we are experiencing some difficulties other businesses are in getting everyone to commit to a 5-day working week in the office. I think it'll be some time before London sees a 5-day working week.
Great. Eddie, and I know you've touched on the Russian thing, but just for avoidance that I haven't missed anything, Eddie asks how much work has been done for sanctioned Russian clients that is unlikely to be paid in the normal time frame. I know you've kind of touched on it, but
so there's two aspects to that. Firstly, the direct answer to the question is none. We currently have done no work for sanctioned Russian clients. If we do undertake work for sanctioned Russian clients, we will only do so with the money to cover the entire matter in our client account. So cash has to be deposited in our client account before we will undertake the work, in order that we will not, because it is a subject of licenses on sanctioned work, that the lawyers must be paid. That's a condition of a license that's granted by the government.
Okay, thank you. John says, thank you for the presentation. Good question, really. At what share price level does it become more attractive to buy stock rather than look at M&A?
That's a very interesting question, Robert. I'm not sure I've got an answer to that. I don't think it's ever happened to me.
Well, look, maybe we can post a response to John past that when you've had a bit more time to consider that. That's a good question.
Actually, Mark, just how I'm not sure that, because I'm not, obviously that's not our activity, buying back, and that's not our job. We do, as you can see from the way in which we structure M&A to date, and we've used debt to do so, we are very live to dilution at the wrong pricing levels. So we're very proactive in looking at how we raise our money. But we certainly haven't looked at using cash to buy back equity. I'll be honest, that isn't sort of first idea. I don't see that as an expansion tactic. That is a kind of contraction activity. Robert, would you agree? Or do you have a view?
No, not really. I think it's a bit early. We're still growing the business and we need to get to a scale, basically.
Yeah.
Okay, thank you. We've got 3 in 1 here from Atif, but his first question is, are you currently looking at any M&A opportunities? And if so, what kind of businesses would you like to enter the RBG fold?
Again, I think I've answered this earlier, that I can't give specifics around the type of businesses because it is too easy to identify them. So I'm going to have to pass on that.
No problem. And then his final question is, what are the biggest challenges you see currently facing the business from realizing your 3 to 5 year plan?
I think the biggest frustration, I have to say, is what's going on around us in the wider world and the impact that's having on public markets and confidence and our valuation, because it is impacting our currency, which is our share price.
Okay. And sorry, finally from Atif, why has insurance costs gone up so much? Is this due to claims from RBG?
No.
It's not due to claims, and I ask the question every time we go and see them. I think the insurance industry is taking the opportunity to reload and push prices up. I think there's probably limited capacity gone into it, but all prices appear to be going up.
That's great. Manzin, you ask a question around M&A that I know Nicola has touched on a couple of times now, and Atif, thank you for your comments about being supportive about share options. As usual, Nicola, Robert, you take every question submitted from investors. You give a very direct and open response, so thank you once again for that, and thank you to all the investors that have asked questions this afternoon. Nicola, it leaves me with nothing further than to ask you perhaps for a few closing comments before I redirect investors, as you say, to give you that very important feedback I know you look over very closely, and then I'll redirect them.
Yes, and my only closing comments would be to say thank you all for your support. There's a retail shareholders are very, very important to us, and your comments and feedback are also vital. Thank you.
That's great. Nicola, Robert, thank you once again for updating investors this morning. Ladies and gentlemen, please do not close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of RBG, we'd like to thank you for attending today's presentation. That now concludes today's session. So good morning to you all.